Markets end flat after a volatile session. Sensex and Nifty remain unchanged from yesterday's close, even as bank stocks gain nearly 1%.
Axis Bank ends the day as the top Nifty gainer after a strong third quarter set of numbers. Net interest income growth comes in at a 10-quarter high. ICICI Bank also rises very strongly ahead of its earnings today.
The DHFL management calls Cobra Port's accusations motivated, rejects allegations of owning shell companies. The stock sees no relief, ends the day down 5%.
Bajaj Auto sees wild swings, ending in the red after reporting a mixed set of third quarter numbers. Jubilant Foodworks ends in the green after delivering on all parameters.
And HCL Tech ends 3% in the green after reporting a strong revenue performance for the third quarter. And equally upbeat management guidance helps. But Godrej Consumer takes a knock after volume growth disappoints. Well, those were the top 5 headlines from Dalal Street on a day when the market was full of micro stories and not much of a macro trend. Hello and welcome to Markets Today, Talk Back, the show where we'll tell you everything that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh. With me, my colleague, Prashant Nair. Hi,
Lata, hi. And over the next 30 minutes, as you pointed out, we will talk about the top market stories, what happened during the day. Our experts will answer your questions. Ashwini and Prakash are with us today to help us do that. We're going to start the Q&A session in just a bit. But before we do that, as always, let's just spend 2 minutes talking about the market itself. I mean, on the Nifty, it was pretty ranged and very tightly ranged, 11-12 point change by close lower. But a lot happened as far as stocks go. Lata.
Actually, I would call it a day of two halves. Within each sector, there were some stocks that were doing well and some stocks that were not. So clearly, it looks like it was more a stock-specific day. And overall, the market was kind of feeling budget blues and therefore decided nothing to do nothing at an index level. Let's start with the banks. You had a stellar performance by Axis on the back of its numbers and a superior guidance, a better than expected guidance from the new management. ICICI joining in with Axis on similar expectations. And on the other hand, the HDFC Twins and the Kotaks, which normally hold up the market, did nothing today. In fact, they were a drag. Look at steel. Tata Steel, excellent on the back of expectations that iron ore is getting pricier and steel is getting pricier. But JSW doesn't take advantage of it. Let's get to the NBFCs. DHFL and Indiabulls. DHFL, despite its clarification, still sees nervous investors. And Indiabulls is also seeing a lot of selling. But if you looked at others like the Cholas and the Sundarams, you see the Bajaj, they're doing reasonably well. So it's actually in every sector, it's a tale of stock-specific action, probably where there was short covering, short positions, people covered like in the graphite stocks, and where there were long positions like probably in the Kotaks and the HDFC Twins, you saw people taking off. In the end, actually, the number of advancing stocks were way more than the number of declining stocks. So it was not really all that bad a trading day, was it?
It wasn't, Lata. So, just to break the market down by stocks and sectors, FMCG, energy and real estate were the areas where there was a pressure. They were the top losing sectors, and financials gained. So led by PSU banks, the private bank index, metals did not do poorly as well. I mean, actually, the metal index by close was up 2%, the biggest gainer. But banks, did a lot of the heavy lifting as well. The Nifty gains came in from ICICI Bank. So it'll react to numbers tomorrow. But it corrected quite a bit. I mean, the recent high was 385 or so, and it had fallen to about 345. So it's pulled back a little bit. SBI was up 2.5. Axis Bank was up. HCL Tech, Z Entertainment and Tata Steel were the other large Nifty gainers. The losers there, Indiabulls Housing, Adani Ports and Bajaj Auto. So those are the big Nifty losers. Broader markets, let's start with gains first. So the HEG, Graphite, these stocks pulled back after getting smashed the last few weeks. Dish TV had a bit of a breather, 11% higher. Philips Carbon was up. Tata Sponge and DCM Shriram were the other big volume price gainers. And the pressure continued in names like DHFL. It was off the lows by quite a bit, but was down 5. LIC Housing Finance was down. And there was Godrej Consumer, which was down 8%. Of course, earnings impact there. Lata.
Okay. Well, let's take it straight away to our guests. First up, Ashwini. What is the next trade on the Nifty? 10,650 close of day today.
See, the issue remains that there is institutional selling on each gap up or each move higher. So that way, like it's happened from previous, excursions towards 10,600, 650, this time market's not showing any strength. I mean, you couldn't hardly manage a 30, 40 point gain today despite, good results, etc. So the mood of the market is sell on rallies, and if there is a relief rally, say because of the budget or whatever, my sense is that chances are again selling will come back and budget will probably be a 1-2 day event. So that is something which is very clear. So tomorrow, if you get good ICICI Bank results, again I would think the same story will repeat. So that being said, this is a market which probably will not be able to hold 10,500, 600 for a long time.
Ashwini, so the advice is sell, any bounce that you may get, right?
Yeah, because, basically the market, this sort of market can be fairly choppy. So if you sell at lower levels, then you get stuck, and it's better to sell on rallies the moment the market turns.
Okay, Ashwini, thanks very much for that. That sets us up for the second headline then. Axis Bank ended the day as the Nifty's top gainer on the back of a strong set of earnings for the third quarter. Net interest income growth came in at 18.4%, the highest growth rate in the last 10 quarters. ICICI Bank too soared and have earnings which are expected to be better. These are essentially two strong points, Dada, right? One feeding off the other. ICICI looking at Axis and expecting good numbers.
No, actually, Axis had every reason to find celebration on the stock price. If you want to look at the top line, NII, that's up 18.5%. You want to look at bottom line, that was up like some, 130%, doubling, despite the fact that they had set aside 600 crore as contingency provisions. Without those contingency provisions, it would have been a well over 2,000 crore profit that they could have reported. Of course, even BOB, others have also done this contingency provisioning. Then look at the margins. Volume is higher, top line, margin is higher at 3.47. It's some, 17 quarter high or something like that. Asset quality. Yes, it's fallen by only, the GNPA and the net NPA have fallen only by 20 basis points. But the entire fall has come from the watch list. So the watch list has shrunk a lot to just about 7,000 crore stocks under double B and below. For a 5 lakh crore balance sheet, 7,000 crore of stocks under B or triple B is not very worrisome. And best of all, the management guidance was that, we will do 18% ROE in a couple of years. The best estimates on the street was 16-17%. So 18% was quite clearly, here's a man with a plan perhaps to do better than estimates. So there was enough reason for investors to upgrade. And we saw a lot of it. CLSA already sitting at 800, made the target price 840. And a bunch of others are near the 800 mark. Practically everyone has a buy.
I think the line which stands out to me, Lata, is the man with a plan. I think that 18% comment on ROE when he addressed the press, I think got everybody's attention quite straight away. Avik Roy from West Bengal has written in with a question on Axis Bank. He's been holding 500 shares of Axis. His price is 556 rupees a share. He's a long-term investor and wants to know if he should hold or sell. Prakash, your thoughts? What would you tell Avik?
It's a distinct hold. There is no ambiguity anymore after these numbers. In fact, we've been talking very positively about Axis for a long time, and it did kind of test people's patience close to that 580, 600 mark. But today, the kind of move that we've seen, the accumulation that is now, and it's under-owned, let's face it, it's not that everybody has Axis in the portfolio already. So a lot of that fresh money that's coming its way will probably see it move to that 800 plus zone quite fine. And he's got a great risk reward. The entry point itself is so decent that he doesn't really need to worry. So Avik Dada just has to wait out and see the 800 mark now.
Okay, Avik Dada, just hold on. Ashwini, your thoughts on the Axis chart?
Well, Axis Bank and all corporate banks have just started moving I won't be surprised if over the next couple of years you see $1,000 on Axis Bank.
Well, from Axis, let's go to ICICI. The numbers came in after market hours. Here are the highlights.
You know, it's one of the strongest quarters that ICICI Bank has reported in a while, especially in terms of asset quality. Significant improvement that we've seen, even in terms of formation of fresh bad loans. So that has come off, or the fresh slippages figure has come off to 2,091 crore rupees. Compare this with 3,017 crore rupees, 3,117 crore rupees over the previous quarter. There is an improvement there. However, profit overall, if you look, you know, there was a decline over the last year, about 2.7% decline at 1,604 crore rupees, and this is even below what our poll had estimated, largely because higher provisioning has sort of eaten into the bottom line as well. Core profit, however, which gives you a better picture of how well the bank's core income functions are performing, at least that has grown sequentially and also YOY, so that remains strong. The net interest income, which is the difference really between what the bank is extending and what it's earning, that has grown by about 20% to 6,875 crore rupees. Margins have also improved. That's also good news, to 3.4% on the back of also a very good deposit growth. So CASA ratio has improved, 20% deposit growth. That means low cost deposits for the bank. That has also seen an improvement. Loan growth has been very strong, in line with what some of its other peers have also reported. Domestic loan growth was about 14% growth over previous year. This, of course, as usual, has been led by retail growth, which grew by about 22% over the same time last year. Provisions, as I was saying, there's been a 690 basis point increase, specifically on account of the NCLT cases as well. The bank has taken a higher provisioning. The mandated provisioning is only about 60 odd percent, but the bank has taken a 76% provisioning increase, a total provisioning cover as far as the NCLT accounts are concerned. So largely, it does look like a very good set of numbers. What we still don't know is, what is the outcome of the Justice Sri Krishna report. That is something that we're still awaiting to hear. Perhaps that could be one overhang on the stock, but other than that, it's a good set of numbers from ICICI Bank.
With that, we'll come to the third headline of the day. This one is on NBFCs. Dewan Housing ended the day close to 5% in the red. This after the lender's management called Cobra Post's accusations motivated and rejected all the allegations, especially those of owning shell companies. The investigative agency has alleged, if you remember, the Cobra Post allegation was that DHFL's promoters had siphoned, money to the tune of 31,000 crores through shell companies. DHFL clarified its position through a conference call. Let's listen in to what they had to say.
All the lending that the company has done, whether it is for slum rehabilitation projects or non-slum rehabilitation projects, is in line with the company's policies. All our loans have a complete security backed by the assets which are mortgaged to us, and assets they are fully secured, and projects which are various stages of approvals and clearances that's in force. We do not have major group lending, we don't have any large exposure to a single group or so, and we will not go into client specific. But then we have an exposure norm in terms of not exceeding 2,000 crores per group. That's an energy exposure norm, and 1,200 crores for a single exposure. And all of them are well within that.
Okay, so that is Kapil Vadavan at DHFL clarifying on that call. Ashok Singh, our viewer from Jaipur, is writing in. He's got a question on DHFL. He's been holding 300 shares of the company. His cost is 270 rupees a piece. Wants to know if he should continue to hold or sell. Ashwini, to you first. DHFL, what would you say?
DHFL, something has broken down, and basically, once something gets into this sort of a mood, anybody who holds it at higher prices will get worried and at some point bail out. So you'll have constant pressure on stocks like DHFL, and you have to exit. Otherwise, you'll see double-digit sort of levels.
Okay. Well, that's difficult advice, but maybe it'll have to be taken. We have to take a break on that note, but while we do that, listen to what the former chief of Goldman Sachs asset management company, Jim O'Neill, told us about the interim budget. Jim O'Neill is important. He was the guy who coined the word BRICS. So ahead of the budget, listening to what he's expecting or making of the budget. We are back in a bit.
India has continued to grow somewhere between 6 and 8% under his term, which means that India now grows by stronger rates than China, and that's partly why the Indian market, of course, has generally done pretty well under him, and crucially, a lot of that growth is driven by domestic demand in India.
Ignition sequence start. 5, 4, 3, 2, 1.
गेम ऑफ चॉइस में अब ईशा की बारी। ईशा चॉइस 1। फेमस शेफ नहीं बनोगी पर जो चाहे खा सकोगी।
What? Next.
या फेमस शेफ बनोगी पर डायबिटिक भी।
ये कैसे ऑप्शंस हैं?
You have to choose.
We'll pick diabetes यार.
Whatever.
Unfair.
Obviously.
हेल्थ और सक्सेस दोनों चाहिए ना? तो सक्सेस ढूंढते हुए हम सेहत को क्यों भूल जाते हैं? करियर के साथ आप हेल्थ पर भी हमारे प्लान मुताबिक ध्यान दीजिए और हम आपको हेल्थ इंश्योरेंस प्रीमियम पर 30% तक रिटर्न्स देंगे। कॉल फॉर एन आदित्य बिरला हेल्थ इंश्योरेंस एडवाइजर, आदित्य बिरला कैपिटल।
The new Baleno. You ready? I'm feeling the groove. I'm making the moves. In the zone tonight, I own the night, so watch me fly. I'm driving a chill. I'm seeking the thrill. I'm dressed to kill, and you know I got that.
The new Baleno. Make bolder moves.
Nexa.
Welcome back. You're with us here on Markets Today Talk Back. Absolutely flat day, but sideways. Lots of stuff to talk about. Banks and financials doing better. Broader markets outperforming the Sensex and the Nifty. We got through 3 of the top 5 stories. Here's the 4th one. The big earnings of the day. Bajaj Auto saw some wild swings. The stock was pretty volatile. It ended in the red after reporting a mixed set of third quarter numbers. The two-wheeler major beat profit expectations led by higher other income, while margins were lower versus expectations. Sonia Shenoy is here, and she's got the basic big highlights from Bajaj numbers. Sonia.
The big pressure pocket really is the margins. This time around, margins have fallen 390 basis points year on year, coming in at just 15.6%. Realizations for the company too have been under pressure, down about 1.5%. But the strategy of pursuing market share over margins is something that has worked well for Bajaj Auto. Their market share in the domestic motorcycle market has gone up to 20% in Q3 versus 18% last quarter. And even in the entry-level segment, their market share has increased. This, of course, has come at the cost of margins. Margins have been under pressure for a couple of reasons. One, of course, the high discounts that the company has had to offer in order to liquidate their high inventory. Raw material costs as a percentage of sales has also gone up. And, the company has been facing heat in terms of demand too because of higher cost of ownership and insurance costs. All in all, the company's guided band of 16 to 17% margins has been breached on the downside. So the stock closed in the red today.
Well, with that, let's get a viewer question in on Bajaj Auto. Akhil from Mumbai writes in with this question. Wants to know the right time to invest in this company, and he wants to invest 1 lakh rupees. Wow. What would you advise him, Prashant?
The first thing is it's not right now. It's not the right time to invest for sure. The reason, and I would relate it to a level, maybe Ashwini could help us with specific levels, but I would wait for an event to play out, and that's the moment the company decides on changing their strategy to moving back to profitable margin growth and not just market share, incremental market share pursuits. Things will change, and the other tipping point for them could be if they were to successfully launch something on the EV side, which they seem to be making some positive strides on. As and when any of these events happen, probably there will be a trigger for the stock to start.
It is at its 52-week low.
Yeah,
then you don't want to buy.
So that's what I'm saying. It could still slide further, okay. And the P multiple is contracting now. What's happened is first the EPS contraction happened for the last 3 quarters. And today I could sense that, you know, market is kind of giving it. What happened to Ashok Leyland? Nothing changed dramatically, but it slid further down. So this could happen as well. So, and that's the time to maybe accumulate it in a couple of tranches maybe.
Okay, Ashwini, the chart check.
You know, why would you want to buy Bajaj Auto when you have, you know, several of these corporate banks, I mean, stocks which are in fashion are doing well. You know, these autos may not do anything for the next 1 year. So, you know, finally, if you buy into dogs, it can tomorrow go down to 2200. So that will not be a great long-term investment. The numbers are down, things are poor. You know, these stocks show 1 or 2 good numbers before you want to buy. Like the first good numbers on Axis Bank have come, first good numbers on ICICI Bank are probably coming. So that way, you know, you want to buy stuff which is on the way up.
Similar point.
A similar point, but he's also giving advice that maybe look at corporate banks and, you know, that 1 lakh rupees would be better served there. Jubilant Foodworks ended the day in the green after delivering on all boxes in Q3. The company's revenue grew almost 17% with margins coming in at a 7-year high. The revenue growth was led by more than 14% growth in the same-store sales number. Net profit also beat street expectations, rising 46%. Meanwhile, Dunkin' Donuts broke even in Q3 ahead of guidance of break-even, which earlier was in the Q4.
I think that Dunkin' Donut news was clearly very positive for Jubilant. And with that, the last headline, and this is more on earnings impact. HCL Tech ended over 3% in the green after reporting strong revenue performance for Q3 and an equally upbeat management guidance. Rima Tendulkar with more.
Yes, strong quarter for HCL Technology, the key highlight being the solid revenue growth, 5.6% on a constant currency basis quarter on quarter, much better than what peers have reported. Not just that, the management has upped the guidance in a way. So what they've said is for FY19 growth will be at the top end of their guided band of 9.5% to 11.5%. Last quarter they said it should be in the midpoint. So in a way, there has been an effective increasing of their guidance. On an organic basis as well, the company is now saying growth should be 6.5% this quarter. Up until last quarter, you know, the organic growth was expected to be between 4.25 to 6.25%. Bookings for the first 9 months of this financial year are up 40% on a year-on-year basis at record levels even this quarter. Now, valuations for HCL Technology are much cheaper than peers. It is trading at a discount of 25 to 40% compared to peers with a PE multiple of 12.5 times. So brokerages are happy with the performance. CLSA, Credit Suisse, Citi, all of them up the target price on HCL.
Okay, Rima, thanks very much for that. We've got a question. Ram Narayanan from Tamil Nadu has sent us this question. He's been holding 35 shares of HCL Tech. His cost is 720 rupees and 50 paise a share. Wants to know whether he should hold or sell. Ashwini, HCL Tech at 720. What should he do?
See, when you buy blue chips, there are periodical you know, downsides and temporary factors, etc. But, you know, these sort of companies, they don't go out of business or nothing permanently gets damaged here. So my sense is long term, there is no problem. It will probably hit fresh ground at 1120. So from there, you could even get 1300. So just stay put. Whenever you get declines, this is the place where you can confidently buy declines instead of something like DHFL.
Okay. Prakash, since HCL Tech has been answered, I'm giving you a choice. Tell us your view on either Jubilant or HCL Tech.
So let me take Jubilant because that,
we haven't analyzed it.
Yeah. So, and today's post-results behavior was very typical of any high-valued stock, which can be high beta in current market conditions. And there was this significant profit booking that came in. But towards the end of the session, the way the stock has been lapped up again very clearly tells you that Q4 could be much better because the Dunkin' Donut drag is out of the way, 1 quarter ahead of estimates. Secondly, the kind of growth that we are seeing, this is a pure consumption story, and if everything goes off well with more money in the pockets of Tier 2, Tier 3 India, there's no reason why they can't. And their expansion of 35 new stores is exactly in the right context. So I think given high valuation, there is this fear on Jubilant, but these numbers will give you some respite for at least the next earning round, and the stock could probably cross 1300 very soon.
Okay, which explains why despite good numbers, it barely moved. But this one moved. Godrej Consumer took a sharp 7% knock in trade after the company reported a weak set of numbers for the third quarter, and weak was primarily on volume growth. It disappointed, coming in just 1%. Expectations were of 5 to 6% volume growth. Profits, revenues, margins were therefore below what the street was expecting. Let's listen to the management.
I think the volume growth numbers for the quarter were a temporary blip, largely driven by the high base quarter. And I think our recommendation would be to take a look at this on a 2-year CAGR basis, because the base quarter has a lot of noise driven by GST rate changes that impacted different players differently. So on a 2-year CAGR basis, the volume growth for the quarter was 10%. That is very consistent with the kind of strong volume growth we have delivered in Q1 and Q3. So for the 9 months, the volume growth is 10%, and our expectation would be to maintain and improve and drive to double-digit volume growth in Q4 as well.
Well, that's the management's explanation, high base, and therefore don't look at it quarter on quarter or quarterly. We don't have time for a question, so we have to wrap up this edition. Prakash and Ashwini, thank you very much for joining us.
From all of us here, thank you very much for staying with us. More coming up after this quick break.